Welcome back. Citizens Financial reporting a top and bottom line beat. The regional bank seeing net loan growth across consumer, private bank, and commercial markets. Stock has outpaced the regional bank ETF this year. Shares, as you can see, up almost 20%. KRE, that's just up a little less than 5% over the same time. Here to break things down, a CNBC exclusive, Citizens Financial's chairman and CEO, Bruce Van Saun. Bruce, always good to have you. I'm going to start off with the private bank, just because you guys seem to highlight it a lot on the call, and you're talking about hiring a lot of people. I mean, is that going to become a real, and is it already a real significant revenue line for you guys?
Yeah, so we're very excited about the progress we've made. As you recall, we did effectively a startup by hiring 150 people when First Republic failed back in the middle of 2023. Here we are 2 years later in 2025. We're on track for this to be 7% accretive to our bottom line. It's delivering about over a 20% ROE. And we have the headcount up to about 500 people. So we've reinforced the teams that we brought in, and then we've expanded into Southern California. We've been hiring private wealth teams to go along with the private bankers. And so we're occupying that white space that First Republic dominated. And I think we're doing it. The 2.0 version is going to be even better than the original First Republic version.
Yeah, your president said that as well. We'll do it better. That is Brendan Coughlin on the call. What does that mean, actually, doing it better? What is 2.0 versus what First Republic had, which was, by the way, a strong franchise?
Yeah, it's a very strong franchise, and no disrespect to that. But I think when you look at our organization relative to First Republic, we have a fully built out commercial bank with lots of middle market relationships. We have 4,500 middle market relationships, which are typically run by very successful people who not only need banking services, but they need personal services and family services. And so our ability to bring total solutions across not just the business, but also on the personal element is something that really wasn't being offered at First Republic. Plus, our consumer bank has a full range of products, including HELOCs, where we're the #1 originator in the country year in and year out, is another great product that we can offer to those customers.
You said on the call you see a clear path to achieving your 16 to 18% return on common equity, tangible common equity. Why? And what does the path look like?
Yeah, so we're at just around 12 today, and so we see another 300 or 400 basis point lift just coming from the expansion of the net interest margin. So we have some legacy drag from swaps that we did that have terminated, that we're just recording the accounting hit over the life of the swaps. As those run off, that just naturally lifts our net interest margin. So we call that time-based benefits. So we can get up to the 15% plus really just from that. But then these initiatives, growing the private bank, the commercial bank, I think, is the best positioned among the super regionals. We've been waiting for activity levels to pick up. We finally saw that in Q3. So now this was our second highest capital markets revenue quarter going back to the fourth quarter of 21. And I think that can be sustainable as well. So we have those initiatives. And I think credit costs are still running a little high. We still are burning off some of the CRE office loan workout costs that'll come down, and then we should also get a benefit from that. So those factors give us a lot of confidence that we can get to that 16 to 18%.
Yeah, and lower rates might help on that front, too. I'm curious, Bruce, we saw the announced merger between Fifth Third and Comerica a week or two ago. What signal did that send to you? Have you been having discussions? Do you feel a pressure to merge in the current environment?
Well, I think, look, that's a good deal on paper. They need to go out and execute it. So good for Fifth Third. We think that we have a lot of organic growth, and so we don't feel compelled. We have enough scale to be competitive. We go up against JPM and B of A in the middle market in the commercial space day in and day out, and we win jump balls against them. So I think we're holding our own at our size. We can be very opportunistic. Like I've said, if we do any acquisitions, the bar would have to be very, very high given the amount of organic growth opportunity that we have in front of us.
Bruce, going to leave it there for today, but always appreciate the update. Thank you.
Okay, sure. My pleasure.